People, welcome back to this space. First video of the year, so happy new year. If you're new to the space, feel free to like, comment, subscribe, share, interact. This space is for you, it's for me, for us. It's going to be a space that we can use to be the most accountable versions of ourselves. Um, and it's going to be a space that I use to learn from the mistakes that we undoubtedly make in this trading space. So stay tuned. There's going to be a lot of stuff out raw, unfiltered. Um, So yeah, look forward to it. One of the goals that I set for myself this year was to be as intentional as I can in regards to my trading this year. I feel like as amazing of a skill set this is, it's very easy to kind of lose track of um kind of what you're trying to achieve. I don't necessarily want it to be surface level things like how much money can I extract from the market. I want to be able to say, um, or ask myself, am I being 1% better than the person that I am yesterday? Am I doing my non-negotiables? Am I being consistent? Am I being disciplined? Not necessarily in my strategy or well, obviously in my strategy, but not necessarily in the trading aspect, but like in myself as well. I really want to be big on that this year. So, with that being said, obviously this is going to be a really short vid as well, but I wanted to just break down um, what I'm looking at in the market currently, where price has been, where price is at. And I also wanted to talk about a position that I placed um, in this morning's London session as well, because I'm currently navigating a challenge. Uh, I'm on phase two on the verification, but I'm currently down minus 9.5%. So I thought, it would make an amazing video um, to see if we can navigate and tackle that. Because in the past, that would have probably been an account that I would have just blown up for me to just, purchase a new one and move on to the next one. But like I said, this year we're here to cut the crap. We're here to be as intentional as possible. Um, and one of those steps in regards to being as intentional as possible is it's really about respecting the capital that we invest into the market in the first place. That also includes capital invested into prop fees, you know. Um, I don't want to be someone that actively just engages in instant gratification. I'm only, in it to try and make capital. I really do want to be the type of person that is really process orientated. And so with that being said, we're gonna navigate this process of um getting this account out of minus 9.5% drawdown to the target isn't even necessarily break even. We're targeting minus 9.5%. So let's get to minus 9.5% and then we'll take it from there. The goal is to show myself, and obviously anybody that chooses to take from this, um, that is possible. You don't necessarily need to rush your challenge, which is actually what I tried to do when I got to phase two. Um, I have had a lot of success using that method. But what happens is when you do find yourself in drawdown, you're not necessarily applying the level of patience required to get out of drawdown. And so yeah, that's the goal for the next couple months, weeks, however long it takes. Um, but yeah, just looking at DXY where it is currently, I'm on the monthly right now. I've got buy side liquidity on the top side, 114.7 around that mark, and I've got sell side liquidity. This is the bottom of this current dealing range, the dealer range from the high that was put in 2022 to the low that was put uh, in 2023. Clearly, price has been bullish ever since. We consolidated for a long period of time, and then we've been bullish off the back end of 2024. Um, and then just having a look at the weekly, what I've got marked out so far is this inversion fair value gap. I'm using this as a drawn liquidity, so I am bullish DXY. Um, And then I've also got this weekly fair value gap coupled with this weekly order block as well. And supporting that price action just below that is this weekly fair value gap that I've used to validate this weekly order block. So I'm going to look to see how price reacts in this space here. But I am looking for bullishness for price to come into this space and then for us to see displacement here and for us to start filling in this gap. I'm not too sure what other feeds are looking like, but for some reason my feed looks like this. So I'm looking for price to start filling in this gap and then for us to start heading back up into like the 110s. So yeah, that's the XY, nice and simple. That's probably all I'm gonna have a look at today. I can't be bothered to have a look at the other pairs, but I am gonna talk about um the position that I took today and kind of why I took it as well. I think that's important for me. So when I do come back um and view this, uh, it'll be a good indication for me. It'll be a good indication for me in regards to what I look for in the market. A good reminder. So I've got extended out in time in this yellow box, this 4 hour inversion fair value gap. You can see price previously respected this fair value gap. You can see the rejection that price had. Price took out this low and then displaced higher, disrespecting this fair value gap. But you can see prices come into it again. Um, and you can see the respect that prices had from this point, from filling in this inversion fair value gap. You can see the respect that prices had. So if you go down into the 1 hour, you can see price coming into it. You got displacement, market structure break here, and then the basis of my position off the back of price breaking this intraday high, uh, the framework was this 4 hour order block here. So prior to London, price action looked like this. So prior to London, this is Tuesday, the 21st of Jan. That London session price came down uh, into the open, the volume of this bullish order block here. You got displacement up. Uh, come out of this replay. So price came into it. In the process of coming into the 4 hour order block, we also took out the previous session's New York low. So this is Monday's New York low. We took out that price action and then we got a little bit of consolidation in that space. We got this market structure break here, which is what prompted me to get in with an entry. Now, when I got in with this entry, it's important for me to note that I was minus 9.5% down. But this was an entry that was textbook for me. It's exactly what I look for. So when we did break it, I took it on the on just well, I took it after we confirmed the market structure break. So I wanted to see us close. I wanted to see a bodily close above that market structure break point. And so I took it then with stops placed at 190, 590 or 589. And then I just let price do its thing. So yeah, decent position, and it's got me, I'd say significantly, well, not significantly, but like it's gotten me a decent number of percentage out of that minus 9.5% drawdown. So I was down, yeah, like I said, minus 9.5% around that mark, and um, I'm currently up 1.5, 1.6%, but a decent amount. Um, This is a swing position, so obviously the plan was to hold it to TP, uh, TP being 192, 580. So to hold until this inversion fair value gap here. So I've moved my stops. I will move my stops to break even and then just let price do its thing. Um, and yeah, that's essentially the position that I placed today. Um, in regards to what I will have a look at, the other pairs actually. In regards to what I'm looking for, regarding like USD denominated pairs, so like the GUs, EUs, I am still bearish. Um, Obviously the goal is to continue following the trend. And actually, to be honest, what got me to minus 9.5% was me trying to go against the trend. And for me, well, yeah, it was the idea of me going against the trend and trying to pick a bottom. Um, I tried to pick a bottom on the JPY denominated pairs, so like GJ, UJ, and I took a string of losses on those pairs. And I found it really difficult to kind of adapt and have a level of flexibility to the framework that I built. Once I had taken maybe a 1 or 2% hit, I should have reevaluated, but I didn't. And so the volume of positions that preceded that, those initial losses on those JPY pairs were quite a few, and the volume was quite high to the point where like I couldn't even journal it. But what I will do is I will write about it. Um, I've got like a little Excel sheet and a OneNote that I use currently for that journaling process. So like I'll put a little message in there. Um, like these are the things that well, this is what happened, this is what you can do better going forward, and then I'll put the images as well. Um, Journaling doesn't have to be, like this amazing thing. Just, keep it really basic, where did you enter, where did you get out, what framework did you use to justify that entry? And if it didn't go in your favor, make sure you write down why did it not go in your favor? If you can add maybe your feelings into those points as well, it will definitely be a bonus because I think how you felt and kind of like your mindset in that point in time um can play a big part. Once you have enough entries in your journal and you notice um particular things about your mindset, for example, over a period of time being repeated, then you know that, all right, cool, this particular thing might be an issue. For example, if it's a common occurrence that you happen to be tired um, or sleepy when you happen to be placed in a position, then maybe it's something that you need to fix, whether you need to adjust the maybe the session that you're placing positions in, or maybe you need to find yourself getting a good night's sleep before, or sleeping early, for example, or just do you know what I mean? Like just write as much as possible. I think those situations will kind of help you navigate the idea of fixing your mistakes a lot easier. Um, So yeah, I've got GU marked out anyway. I've got this volume imbalance as a draw on liquidity. I've also got this weekly fair value gap that I'm looking to see if we respect going into the rest of the week. And then I've also drawn out this daily order block that I am looking at as an area for price to come into and for us to see displacement. We're significantly above the weekly open from when we opened. I'm pretty sure we've just seen bullishness. So we've had accumulation of the back of last week. Um, we didn't see that much movement in terms of range. Um, we didn't see that much. Literally, price has literally just been in this maybe 100 pip range, even though 100 pips is a lot of pips, but visually it has not moved much. Um, and now I'm attributing this movement up to manipulation, and then uh, I'm looking for the possibility of distribution at this daily order block. Um, these are all ideas, so don't take it at face value, but just have a look to see how does price react at this daily order block. The whole point of trading, I don't necessarily take um, um, the initial touch on my point of interest. I'll wait for lower time frame confirmation to justify whether or not um, this point of interest is valid. Because a lot of the time we could just bypass this and price could just continue up, really and truly. So yeah, that's the framework that I'm looking at, and it's kind of similar to EU as well. So instead of a daily bearish order block, I've got this daily fair value gap extended out in time. So I'm looking for price to respect that. Perhaps even this weekly volume imbalance here, because we have this weekly inversion fair value gap that we've respected here. So yeah, price could perhaps come up into this weekly volume imbalance for this area here. And then again, we're just looking for that lower time frame reaction, breaking market structure, return to break our fair value gap, and then the continuation down. So some pretty easy ideas. I'm willing to be patient this week. Again, I'm navigating this account that's significantly down. So unlike last week, I'm not looking to, force my entries or get out drawdown as soon as possible. I'm just, something I'm willing to take my time on. So I'm not in a rush. And yeah, like I said, a lot more videos to come. I'm going to try and focus on some pre-market material, so like maybe like Sunday breakdowns. I'm going to try and focus on some backtesting sessions as well. Backtesting is really big to me, and it helps me kind of refine what I'm looking for. And when I've lost confidence in the market, for example, and like in when I've lost confidence in terms of like what I look for in an entry, um, I'm going back to the simulator and I'm playing about with the simulator, and I'm gaining my confidence there. I feel like it's, really underrated. I don't think enough people do it, to be honest. Um, and to be honest, like off the back of like my last week's struggles, I spent most of the weekend just on the simulator, and that allowed me to recoup my mental capital, come back to the markets, and ultimately even take this GJ position that I took. Um, and so yeah, we're just navigating that. But yeah, stay tuned. Like I said, more videos to come. Like, subscribe, share with your friends. Leave some comments as well. Anything that you feel like I can improve on. If you've got some advice for me, anything that you want to see me talk about. And yeah, let's get it.